We're joined on the show by two special guests from London. Mark Williams, who's Chief Asia Economist at Capital Economics, and Sarah Hubin, who's Senior Economist at Standard Chartered Bank, both of us joining from London. Sarah, let me start with you. Europe's in the green today as the markets bet that Greece will stay within the Eurozone, but you still have Spain and possibly even Italy that are having troubles of their own. Is it fair to say that the situation's nowhere under control as yet?
There are huge risks out there. I think that the outcome of the Greek elections on the 17th of June are still very, very uncertain, and it's possible that we could see either an inconclusive result to the elections or an anti-EU bailout coalition forming. Both of those outcomes would be negative, not just for Greece, but also for other weaker countries in the periphery, including Spain and Italy. Now, it's true that Spain and Italy do have their own particular sets of problems, and independent of what happens in Greece, those issues aren't going to go away. But certainly the Greek crisis, if it worsens after the election, that could certainly escalate the problems for Spain and Italy.
Now, Sarah, do you believe there's a strong likelihood of the Spanish banking system collapsing and requiring an expensive bailout?
I'm not sure that we would necessarily talk about the Spanish banking system collapsing. They could well need a bailout. This is something that we've flagged for some time. But the European bailout funds are there to help with the banks, particularly once we have the European Stability Mechanism up and running in July. That has the ability then to support banks rather than having to support the governments as a whole. The way that it works, of course, is that sort of governments would request support for their banks, so the funding would still go via the government. But it looks as if there should be substantial funding there, and it could well be that the Spanish banking system is the first part of the euro area that actually taps the ESM.
Now, Mark, the European debt crisis is giving investors sleepless nights in Asia. What's your outlook on Asian financial markets in the near term?
Well, there's a pretty well-established pattern by now, which is that whenever the Eurozone crisis bubbles up, then assets in emerging markets get hit. And there's no sign at the moment that that pattern is breaking down. So really your outlook for emerging Asian equities and emerging Asian currencies over the next few months, I think, depends on what you think is going to happen in Europe. Now, our view is that the crisis there is far from over, that things are going to get a lot worse before they get better. And in those circumstances, I think you have to be pretty downbeat about the near-term outlook for Asian equities and currencies.
Now, Mark, the slowdown in the Chinese and Indian economies has got policymakers worried. What's your outlook as far as these two economies go?
The policymakers in India don't have a great deal of room for manoeuvre. We think, therefore, that the economy is going to struggle this year. The first quarter GDP numbers are due out in a few days' time. It looks pretty likely that growth will have dropped from the 6.1% that we saw at the end of last year, possibly to below 6%. That would be the worst quarter of growth that India has had for a long time, worse than at any point during the financial crisis, for example. And given how high inflation is, there's not much prospect of significant monetary easing there either. So I think it looks, well, you can say for certain that the government's hopes this year for 7.5% or so GDP growth are unlikely to be fulfilled. When it comes to China, the more recent data from China have been absolutely abysmal. The April data across the board were awful. The difference, though, between China and India is that Chinese policymakers do have significant room to act. And it's clear that policymakers have now changed their stance. I think it's likely that over the next month or two we'll start to see that hitting the economy, and that Chinese growth will start to pick up again.
Now, Sarah, Mark Farber says that the chance of a global recession is now 100%. Is that being too pessimistic?
That there is going to be a Greek exit with contagion to other euro area economies. I think as we stand at the moment, the euro area, in our view, looks likely to be in recession in 2012, and this is what we'd anticipated really from late last year. So the euro area and probably the wider EU could well see negative growth in 2012. For the rest of the world, though, of course, the US, while not out of the woods, is reporting some mixed data. So it doesn't look likely that the US will be in recession unless there is a really serious crisis in the euro area. And similarly for China, we see a soft landing for the Chinese economy rather than a hard landing.
Now, Mark, just picking up on the point that Sarah made, what do you believe the immediate impact of a Greek exit on Asian economies will be? Do you believe that Asia will be more severely hit than with the 2009 financial crisis?
Well, the main channel by which a Greek exit would hit Asia would probably be through trade. Now, if that exit happened fairly smoothly, the impact on Asia, I think, would actually be quite small. And Greece itself is a small part of the Eurozone, and we've already seen Eurozone growth has been pretty weak for a while, and Asian economies have been doing okay. That's partly been helped by the fact that the US economy has been doing a lot better. So as long as that continues, I don't think there's too much to be worried about for Asian economies. However, there is, of course, a risk that the breakup of the Eurozone is a lot messier, and in particular that there's some sort of financial crisis that goes along with it. And then I think it makes a lot more sense to be looking back to what happened at the end of 2008 and thinking about whether similar things could happen. In particular for Asia, I mean, Asia is not reliant on European banks, for example, for financing in the same way that some countries in emerging Europe are.
Now, Sarah, just bringing it back to you, there's a view that as the situation in Europe remains challenging, crude oil prices are going to slip much further from current levels. In fact, some believe that Brent crude could drop to as low as $90 a barrel. How likely do you see that as happening?
Commodity prices would come under pressure because we would anticipate that the global economic repercussions of such a bad outcome in Europe would be very negative. Though under those circumstances, global demand generally would sink quite sharply, and that you would anticipate would have an impact on oil prices. Having said that, if we assume that Europe can either muddle through or that we have a Greek exit which can be contained, then there are other issues that we need to look at in terms of oil. Supply constraints are certainly still very much having a bearing on what's happening to oil prices. So a drop down to 90 really only looks likely in an environment where the global economy is in severe difficulty because of European problems.
Right, and Mark, let's just bring it back to you for one final word. The currency markets have also seen a lot of volatility in recent days. What's your outlook on the euro and the beta risk currencies, the high beta risk currencies like the Indian rupee?
Well, we think that the euro has significantly further to weaken. We think that the Eurozone crisis still has a lot further to go. And in those circumstances, I think that that Asian currencies in general will also suffer, but in particular currencies such as the rupee. So we've seen that the Reserve Bank of India has been attempting to stem the slide in the rupee over the past few weeks. It hasn't been successful. We don't think it will be successful, largely because the forces that are acting against the rupee are global in scale, and that the Reserve Bank at the moment is not willing to step in on the sort of scale it would need to offset them. So I think it's more likely than not that the rupee will end this year weaker than it is today.
Mark Williams and Sarah Hewen, many thanks for coming in on the show with your perspective on the outlook for the Euro region and indeed the impact of what we are seeing play out in Europe on Asian markets.